Hello everyone, hope you're doing well. Welcome to another episode of Monday Markets. First things first, as a gentle reminder, there are 3 new videos on the CryptoCred channel as additions to the technical analysis series. They're all very important. There's one on horizontal SR, there is one on entry triggers, and there is one on a top-down view of the markets. These are very important premises when it comes to both my trading, but I'm sure regardless of whatever system you employ, they will be helpful. At the very least, if you enjoy these videos, you'll understand better when I talk about entry triggers or bias or whatever it may be, what I mean if you watch those videos. No real downsides. I think that's some of my best work. I kindly ask you to go over there and make the most of the resources available. So with that out of the way, I should also add that I've been posting some trade reviews also on my Twitter. So that's at CryptoCred. There's a Litecoin short and a Bitcoin short that I took over the course of the week. If you want to see the trade logic, sort of before the trade comes to fruition, my execution, and then management and whatever, take profit, do check those out because there's a full sort of breakdown there. Now, as far as BTC USD this week, it should come as no surprise that my swing strategy has not been triggered. Why? Well, because the market is not at a very high time frame level. As far as monthly support goes, that's at 13K. If we go on the weekly time frame, the relevant levels are sort of, 12K, which is this bull market pre-breakout shelf. That's what's below us. It hasn't been reached. In terms of what's above us, the point that my eye is drawn to is the 20K pre-breakdown consolidation, which the market is currently below. So even just a basic eye test for my swing strategy, like where is the market? The answer is not really anywhere, because this is the discounted buy swing setup. This is the reclaim or failed breakdown swing setup, and everything in between I have to defer to lower timeframes, which by definition don't fit into my swing trading strategy framework. And just as a quick point of clarification as to what that means, when I say swing strat, what I mean is buy/sell high time frame levels, cover at high time frame levels, e.g. weekly support to weekly resistance, right? That's sort of the basic of the swing strategy. The higher time frame moves we expect to give bigger moves, and the targets for those bigger moves are other high time frame levels. Now, when it comes to my intraday strategy, which again I talk about at length on my Twitter and in those videos that I mentioned, the first premise is the same, which is to buy or sell high time frame levels for the most part, but then the big distinction comes in the trade management or the trade sort of covering portion, where I cover at low time frame levels, and for example, weekly support to 4-hour resistance. Hopefully the distinction there is clear. For swings, by definition, looking for bigger moves, trading one high time frame level to the next. Intraday, not too dissimilar. I'm still, broadly speaking, looking to do business at high time frame levels, but I'm not looking for the big move. I'm looking for a move or just some sort of reaction to a low time frame level, which is why here it's weekly to weekly, whereas here it's weekly to whatever the lower time frame may be. Daily, 4-hour, 1 hour, 15-minute, depending on what the chart looks like. So that's kind of the framework within which I am operating, and that's informing my market view at the moment. I'm still very much on the intraday side of things. Now, you'll recall last week we talked about this range on BTC USD. The lowest close, 16K, midpoint, 16.7, range high, 17.6. I believe the argument made at the time was that if the market comes in and spikes the previous week's low, which I believe would have been this one, and the breakdown fails and is accepted back within the range, we could reasonably target the range midpoint. Now that trade has played out, right? So the obvious portion of the move, so to speak, is complete, and that's almost exactly how the market unfolded, although the entry on this one was tricky. I didn't manage to get it. I took 2 other intraday trades not based on this idea, but from a higher time frame point of view, that's exactly what happened. You have support, attempted breakdown, which takes out previous week's low, but you can see that the breakout was not accepted by the market. Why? Well, it came back to, well, first of all, you get some wick action as opposed to acceleration. That's the first red flag. The market tries to retest the level, closes below it, but doesn't go anywhere, just continues to consolidate. And then obviously the clearest signal was this 4-hour candle straight back into the range, no sign of a breakdown whatsoever. And all the positioning that was bearish here is now trapped, which is why the market, instead of pulling back in an orderly fashion, just kind of marched up to the range midpoint, and that was that. I actually set a limit order in the market to buy this level after the 4-hour close, thinking that maybe it gives me a wick or a cheeky pullback. Instead, it was far more aggressive and ended up finding support at this pre-breakdown structure, which is fine. The market can and will do that, and we'll see in a moment how this kind of cluster is perhaps relevant once again in terms of where we're trading right now. But the meat of the move from the daily idea is complete. The range low held, and the range midpoint was reached, and that's it. And that's kind of where we're trading right now. We are between the range low, which is support until proven otherwise, and the range midpoint, which is also resistance until proven otherwise. And bear in mind, we also have an untested range high above us. Now, what might we be looking for during the course of this week? Well, if we look on the daily time frame to jump back for a moment, there's still no clear reasons to believe that 16k isn't support. The first evidence of that would be a daily close below 16k, and I'd actually look to get short one form or another if that were to happen, because generally speaking, the way these reclaim setups work is, you have support, failed breakdown, back above the level, and then, once the reclaim takes place, that's your bullish trigger for higher prices. However, if that pattern fails and you have support, failed breakdown, and then the market finds support there, but then eventually comes back and fails where it has already failed. It's kind of the double deviation setup. It's generally unlikely that it kind of fakes out twice and reclaims the level again. If this isn't enough of a trap for support to hold, then probably nothing is, which is to say that if I get, the trap's already been sprung, and I don't believe in double traps all too often. So if I get a daily close back below the level, during the course of this week, I would not interpret that as, look, last time it closed below, it rallied, so this time it closed below, it's going to rally again. That's not how I approach these things. My sort of presumption would be that the fact that it closed below means that the support is cooked, and I'd expect momentum continuation lower and look for some sort of entry trigger near this type of structure to get me on board. So in terms of bias for the week using this range, we kind of have to use this range because we don't have much else in terms of high time frame structure. As long as there are no daily closes back below this level, it's fine for bounces. If there is a daily close back below this range low, which is 16k, then it would start to look not so great. Now, again, in terms of what's in front of us, there are no closes on the daily time frame, so I can technically look for bounces in this type of area. Now, what might that suggest? Well, generally speaking, as I said, when the market initially reclaimed and rallied off of this level here, I left a limit order in the market to get involved here, and my stop probably would have been the thrust candle low, unless I got something compelling developed here, and the target would have been, in one form or another, presumably, the range midpoint, had it filled there. Now, the range midpoint's already been tested, and the market broke down, so that also calls for some reassessment. Generally speaking, in terms of outlining this area, so 16k is the range low. I am allowed to do business around there with no daily close below, but I can also be aware that this high time frame structure is allowed to wick. So what you can do is kind of box together the level itself, and then this little consolidation here that occurred before the impulsive move. You can call it a demand zone, you can call it whatever you want. So you end up with an area comprised of the level itself and then the lowest close of this consolidation before the move up. So something like this. That is to say, I'm allowed to look for buys this week at the range low within this area, as long as they don't ultimately resolve in a daily close below the structure. Certainly, I can't look for those buys if the market ends up on a daily close through the range low. So anything into here, technically speaking, I can look for entry triggers to get long. Now, the question is into where? And that one is tricky. It depends. Well, for example, ordinarily, if we take this range at face value, the targets would be the range midpoint and the range high. There's nothing wrong with that. But again, with this intraday strategy, I tend to be very, very conservative with my targets. So it all depends on kind of how the market unfolds here. For example, if this outside bar just starts to retrace without testing this point of breakdown and the weekly open and whatever else, I actually think the weekly open is very close to that level. If we can just add this very quickly. Weekly open, let's make it a nicer color and a bit thinner, and then go back to our intraday time frame. Yeah, not quite there yet, but you can see the weekly open has some confluence with this previous broken support turn resistance. So one version of that idea could be a pullback into that aforementioned cluster of daily level and 4-hour demand zone, something like this. Once it gets there, I'm allowed to look for entry triggers with a daily close below as my invalidation, and then my target would be the weekly open range midpoint type of confluence, and then if the market looks good, or if I see something really compelling around my entry, I may be inclined to hold it out towards the range high. And again, there are so many ways to slice this. For example, my target could be the range high, but say the market gives me what I want and pushes through the midpoint, but then falls back below and fails, that in itself would be a kind of trade management thing where I'd cut the trade and that would be enough. So again, I can't hope to forecast every single thing that happens before it happens. I can give you the broad levels and the broad entry triggers and make videos around those concepts, and hopefully you're well enough equipped and know my trading style well enough to kind of be able to tell what's reasonable and what's not reasonable. But that's kind of it for BTC USD. The range is the same. The support at 16k is still intact. I'm open-minded towards punting that level and doing business there, be it the 4-hour demand zone or the level itself. The invalidation is the daily close below. I'm still trading my intraday strategy, which would mean that targets are conservative. Range midpoint weekly open, target 1. And if I'm lucky, range high is 17.6, target 2. if the market is going to be bearish or make me reconsider my bias or assume that this consolidation more broadly, right, if we take a zoomed out view, that this structure will develop in the form of impulse, consolidate, impulse, I think the first sign of that will be a daily close below, and I can look to get short in one form or another. And again, there are so many ways that this can unfold during the course of the week. For example, let's say this daily candle just closes somewhere around here, and then we have our previous day's high and previous day's low set, or our Monday range, whatever you want to call it, right? So this will be our previous day's high, this would be our previous day's low, and then let's say tomorrow, let's say this is the daily close, and then tomorrow the market comes in off of the daily open, right? Comes in off the daily open, spikes previous day's low into support, reclaims it on lower time frames, potentially entry trigger 1, and then ends up reclaiming the daily open, potentially entry trigger 2, into the range midpoint, range high. Hopefully it won't get stuck at the weekly open at that point. You can see all these price action techniques: daily open flip, previous day's high low, candle close, whatever. You don't have to apply them all at the same time or apply them indiscriminately. They're just the sort of part of your toolbox, and then you can apply them depending on what the market offers you. I've probably gone way too much into detail. If you hate this type of stuff and would rather just have the levels and the squiggles, let me know. But I'm trying to be as forthcoming as I can in terms of how I look to trade the market if I'm engaging on a lower time frame. But if all of that was jargon nonsense to you, the basic idea is 16K support, as long as there are no daily closes below it. Range midpoint and range high are the relevant structures within the range. Ta-da. So we'll see what we get, really. As far as ETH goes, monthly time frame is still at support. And you know, it's still the divergence that we talked about last week, where Bitcoin has broken its lows, ETH hasn't. That's been a bit tricky. I personally have found nothing terribly compelling on the ETH side, because monthly support is still holding. But if we look at where the weekly closed, it closed within the top part of this cluster or this range or whatever you want to call it that preceded the big breakout. So on the weekly time frame, this is a close at resistance, and you can see its resistance even during the course of this week, as in today. So there isn't a whole lot that I can do here, even though we are at monthly support, because the weekly time frame is just a bit too compressed. Another concern I have on the daily time frame is twofold, actually. The first is, if we look at this daily type of price action and use this old range high, which got a bit messy here, but still relevant structure, there have been no daily closes above it, and that still seems to be acting as resistance. And if we kind of take a more granular view of the price action that we've got going on here, two things are happening. The first is that the market rallied, which is good, but where did it rally to? It ended up slowing down at this pre-breakdown supply zone cluster, whatever you want to call it. So at the very least, on the daily time frame, if you're going to get me excited, I need this resistance supply zone cluster structure to break, and then maybe this, you know, we can sort of fill out the rest of this range here. And you can see that this actually ends up falling more or less within the range midpoint of that type of cluster, just a bit messier than BTC USD. I actually think because the structures are so similar, you could just superimpose this level: lowest close support, highest close resistance, and then range midpoint here. And so you're left with the same chart as BTC USD, which is that it bounced off the range low but got stuck at the range midpoint. Fine. The other concern I have is the following, and this could be me being superstitious, but there is a really clean kind of double bottom resting here just under 1.1k. This spike didn't tag the lowest low made. Now, it doesn't have to, but I just know a lot of the time, especially if I'm trying to position for bigger moves, and there is this double bottom left below me, even if it works out in my favor originally or sort of early on, just too many times it's come out and spiked me out and then given the larger move that I was looking for. So I would love to get this resolved. If during the course of the week we get a similar setup that we got last week on BTC USD in ETH USD, which is to say that the market comes in to the range low, ends up taking out these lows and then reaccepting back inside the range and failing to break down, then that in itself would be a really good retrade towards the range midpoint and the range high. But at the moment, I have nothing terribly interesting in ETH because the range midpoint is acting as resistance. I don't have a ton of support in the middle compared to BTC, which is quite close to a level, and there is this kind of scary looking double bottom, which could be a target for a tag during the course of this week in one form or another. And as I said, the weekly time frame isn't giving me anything to support that idea. So that's kind of it for ETH. Because the range looks so similar to BTC USD, all the ideas that, you know, the cases I made for playing the range low bounce in one form or another are also applicable to ETH USD, like really deep range low pullback. Is it a previous day's low spike? Is it a close below, close above? Is it just like a price action, first test, best test type of thing? However way that sets up, I am allowed and open-minded to short-term trading based off this 1.1k range low. My target might even end up becoming, if I get an entry, this type of pre-breakdown support turned resistance, whatever. But the only real idea that's, has a decent chance of me executing, or the only trade I can take this week for ETH is a range low pullback and look for something there, similar to BTC USD. With all this going on, realistically, the only thing I can look for is a range low pullback and hope I get some sort of decent entry trigger and manage it conservatively. I know that was very long and quite ranty, but there was a fair amount of detail there, and I think if you complement it by watching my trade reviews and the videos on the Cred channel, you should start to get a decent understanding, I think, of how I look at these things. But I do want to hear your feedback. We have been getting a bit more granular with these things based on specific trade entry executions and so on and so forth. If you want to see more, and if you prefer this level of detail, please let me know in the comments. Don't assume someone else will do it for you. Please tell me, and I'll know. If you prefer just the larger picture, faster overview stuff, I'll go back to doing that. So hearing from you on this point is very important. On the altcoin front, I haven't found anything terribly interesting. I got out of a Litecoin short last night. In terms of the week ahead, there's one level that jumps out at me for on BNB. If we look at this area, previous highs, excess nuke, the market is kind of creeping back towards that type of structure. Specifically, I think you can capture most of that price action by boxing out this pre-breakout cluster between sort of the 320 handle and, in the 320s. You can see how neatly that level lines up. Range high, overshoot, break in market structure, and now coming up for a retest. So if I'm looking for any type of, again, this is only the low time frame strategy, some sort of reaction in BNB for a short-term trade, you would be from this area, and I would look for anything, really. Maybe even something as conservative as to the 300 handle, take it from A to B, and that'll be enough. It's a bit annoying that the market seems to have reversed before that. Maybe there's a world in which I can use the same range as we did for BTC and ETH and view it in the following way. If this daily closes below, then this move was the deviation, right? If we look at how this range is unfolded, failed break below, all the way back above. And what we're seeing right now, potentially, again, unconfirmed yet, is failed break above and then move to the other side of the range. So if this daily closes somewhere below the level, during the course of the week, I'm allowed to look to sell rallies into the range midpoint, potentially into the range low. So that's kind of, if this was the top, that's how I get on board that for my intraday strategy. If it wasn't the top and the market actually reclaims the range high, as whatever, reclaims the range high and ends up pushing higher, I can still look to do business at this cluster here for some sort of resistance play, something like this, for example. Just that alone would be viable. So that's it for BNB. I would say keep an eye on that 320 much higher time frame shelf. If the market doesn't get there, then I think the reasonable boundaries to use are very similar to BTC and ETH, lowest close, highest close, and sort of navigating the market within these parameters. Dogecoin, not particularly interested at this exact juncture. You'll recall that we talked about this weekly level going back all the way to this highest close, and the market closed below it and then mega engulfed above it. It's very unlikely that I get something actionable here. So I think I'm going to leave it for the most part. The only sort of relevant level that where I can see myself doing business, potentially if I get, this isn't terribly high on my list of priorities, and maybe we do the same thing of lowest close range low, highest close range high, and just kind of treat that with the ordinary rules that we know. But also, if it does rally further, my assumption is going to be it's not going to make a new higher high. So if it chooses to, for example, come into this pre-breakdown cluster around 12 cents, that's also an area where I can look to trade my lower time frame strategy. So in terms of levels for Dogecoin, range high, range low, pre-breakout cluster, that's sort of where I've got my maps set for the market. Litecoin is a big one. I took a trade idea on this and it's played out. So let me know if you, as in go watch it on Twitter. The full explanation is there. I won't repeat it. The basic premise was that this area is a big level of weekly resistance. It still is, and it certainly was enough to give a reaction that was worth trading, but it also didn't close too bearishly. So for example, it didn't close back below previous week's high or back within the range. Just kind of looks like it pulled back a bit from a larger breakout. So that's nice. One level that I'm interested in for Litecoin, although now that Don's been shilling it and buying it, I'm not sure if I'll get it, is actually a slightly more conservative breakout level at around the 69 handle. We have some nice meme confluence there as well. So, from an intraday perspective, in terms of my strategy, I'm technically allowed to look for some sort of bounce, even if it's into here, from that daily level of support. And obviously, if you're looking on a sort of during the week on a swing basis, I think any daily closes back below this level would make this look like a dodgy deviation, and then we can just kind of treat it like any other range high, range low, range midpoint, whatever. And so I think daily acceptance below 68, 69 or thereabouts would start to look bad. But given this breakout doesn't look too Barty at the moment, I am allowed to play bounces off it or look for entry triggers should it come back. I'm not sure if it will, but that's also something on my radar. Matic, nothing there. I mean, that's it. It's just not at any of the levels that I care about, and this is just way too messy for me. So I don't even have this thing marked out. I don't care about it. Sol, I feel like I missed out on doing business at a weekly level that we've talked about for some length, specifically at this 15 type of handle. The price action there was... it was a bit wonky, and I was too busy managing my Litecoin trade. There still could be something here during the course of this week, but for the time being, it just seems like, if we look on the weekly time frame, it's a close below resistance, and on the daily time frame, no acceptance above. So that still seems to be a kind of sticking point for the market, although I would argue that there is some structure at $13, and that kind of makes for the range we have for the time being. So, in terms of immediate eye test, if I were looking to punt this, I think the bounce from this level, I'm already late to that trade, so I have no interest doing business there. But given the weekly and the daily closes have been at resistance, there is a world in which, and we have this nice double top coming in here as well, and a bunch of highs stacked. If the market during the course of this week exceeds all of those highs, but then ultimately ends up in some sort of failed breakdown structure, that in itself could be a decent failed break to lower, specifically this range low, and potentially towards all the way to the demand zone that the move came from. So nothing too interesting in Solana. I was trying to catch this leg during the course of the week. It didn't happen, so now I have to let the price action unfold and see what's up. Any dodgy deviations, again, basic eye test, we have so many highs stacked around this type of area, 1, 2, 3, 4, 5, whatever. Any dodgy deviations into there that look like a failed breakdown in confluence at the weekly level, I think that might be tradable on a short-term basis. Not interested in AVAX. I know it is at a level of monthly support, but there's no kind of daily structure or anything terribly compelling for me at the moment. I may change my mind, and if I do, you'll see it, but I just really haven't been paying much attention to this. And really the same applies to the rest of these. Uni, not much. Atom, disinterested. Link, you could make a case for a failed breakdown type of thing on the weekly time frame. It wouldn't be the worst case ever. So potentially, during the course of this week, there may be something there, but honestly, just even saying that right now, this range low is so messy. I really don't like this price action. I think there are better setups across the board than this one. I think DYDX is reaching a weekly level, which is interesting. There may be some sort of midpoint bounce to be had from this cluster here, but again, it's not very high on my list of priorities when it comes to where I think the decent intraday or even intra-week setups will come up. Sort of the jury's out, or the jury is apathetic. Ape is an interesting one. If we look at, I think I've got this marked up somewhere. Yeah. So if we look at Ape right now, oh, it's there. Great. In any case, this $4 handle has some spicy stuff going on. So this weekly lowest close, the market close below it, is resistance, right? And then if we extrapolate the level further, and this takes it to the wick type of area, including around the last low pre-break at $4, this is all technically a move into resistance, right? Even if you just look at the market, whether this is your support or this is your support, this structure broke it. Anything into it is a retest until proven otherwise, especially these early week retests. At least revert back to the weekly open or thereabouts a lot of the time. So this is something where I could look for a punt. I'll be open-minded. I'm going to actually boost this a bit higher on my watch list to see if something sets up. Specifically, it's at the apex of resistance. This is a deep push, and I will also just mark previous week's high as a potential inflection point because the weekly time frame is going to turn bearish. We expect this to be the wick portion and a spike of our previous week's high and a move at the very least back towards the weekly open, if not something much lower, given we're dealing with a confluence of resistance. Weekly open. So there could be something there. There could be something there. I'd keep an eye on the $4 handle more broadly. This is a very kind of rounded retest of a big level of resistance. So during the course of the week, there may be some sort of reaction from it that's tradable. And again, same entry triggers apply. You know, deviation below previous week's high, daily open strategy, close above, close below, all the standard stuff that we hopefully know by now. If I take something here, I mean, you'll see it on my Twitter eventually. But at least this is at a good level, hence why it's sort of boosted on my watch list. One important thing to note is that the market is still super correlated. So, for example, if my Bitcoin range low idea completely folds or it doesn't trigger or the market just pukes and rolls over without getting me involved, so on and so forth, you know, and that sets the directional bias for the market more broadly. It's not the case that I think Bitcoin looks terrible and bearish, but I'll still be looking at all these altcoin, long, short, whatever setups. For the most part, my focus is on Bitcoin and ETH. And if I'm taking ideas on the altcoins, I'd want them to complement my bias on BTC and ETH and not go against it. So that's an important final little prerequisite there. Nothing too interesting in legacy. It's a bit of a headline-driven week. I think we've got some economic data coming out later that I spoke about on Weekly Open, so keep your eyes peeled there. I haven't been paying too much attention to this specifically because there's just one level that I care about, as you'll recall last week. It's this 3,900 level, so I'll kind of know that I have to care about the S&P 500. If this level starts to fail and we get acceptance below, that would be bad, and more headwinds for crypto. As far as crypto-specific stuff, I mean, what is it? BlockFi filed for bankruptcy, but no one cares. We kind of knew that they were screwed, so that wasn't news to the market, and it sort of shrugged it off. My other concern during the course of this week is I really would like some sort of resolution to the whole DCG Genesis situation. You know, these are the biggest firms and one of the biggest companies in crypto. They do Genesis, it's CoinDesk, and you know, there's a lot of infrastructure going on there, and I don't think we move meaningfully or trend at the very least without getting some resolution there. So keep an eye out for headlines, still relevant as ever. Hopefully the ideas and technical explanations made sense. Again, I'm sorry to be so repetitive, but I really need to hear from you if you prefer the more technical, low time frame, entry, you know, breakdowns, entry triggers, and so on and so forth, which result in a longer video, or if you just want the 10 to 15 minute, this is support, this is resistance, these are levels, this is what I see. It's, you know, we do this for you, so whatever you think you'll benefit from, cast your vote, so to speak, in the comments section. That's all from me. Thank you for watching. Like, subscribe, all the stuff. Appreciate your audience as ever, and I'll see you for the newsletter tomorrow at trletter.com. Casual Friday, all the usual programming on the channel. Thank you. Hope you had an excellent weekend and take care.